This is Ron Brown. I was in Dallas, Texas last week presenting at an ETF conference for one of the local technical analysis groups, and I was down there to demonstrate a high-growth stock investor, but I also had a few minutes to show EdgeRater, but unfortunately I really didn't have the time to get into it like I should. So I've asked Chris White, the developer, if we could get online together and discuss his program, and he's on here, and we're just going to discuss EdgeRater and some of its capabilities. Primarily, we're going to concentrate on relative strength, screening, and testing today, and we'll be looking at different market periods to see how these ETFs performed, and we're specifically going to do testing on the ETFs which are in the Connors book, and that book is High Probability ETF Trading. And so let's go ahead and get started. How you doing, Chris?
Oh, I'm doing well, thanks, Ron. And I should say the version that we're going to be using for this is the new version. So this is version 4 of the program, and the current version that's been out since October last year is 3.5. But next month, June the 15th, is the release date for this version 4, and this contains all of the features that you need to be able to do the relative strength testing.
Okay, Chris, why don't you show me that segment you showed me the other day, or that portion of the program where you can actually see the rotation of ETFs going from high relative strength to low relative strength. And why don't we take a look at the Connors ETFs? You can explain how you got those into a group and what the relative strength actually is.
Yeah, okay. Sounds good. Well, on the screen here, you see there's 3 tabs at the bottom, but the one that you use for doing your analysis and the backtesting is this is how you set up your entries and exits. And this is where the snapshot idea comes in, and a snapshot is just a set of stocks that you're interested in analyzing, and you would have recorded or saved that snapshot for a particular time frame that you're interested in analyzing too. So I've got the Connors ETFs in this snapshot. You can see that it tells me I have 21 symbols in here. So if you click on the symbols, you get a list of all the symbols that are in the snapshot, and then you can sort them by the earliest date, the from date, or the to date, the last date that's available for that symbol in the snapshot. And you can see not all of them start on the same date because they weren't all available. All those ETFs did not exist for that duration. Now, so that's the snapshot. That's the data we're going to be analyzing.
Now, what do you use for data sources?
Well, there are 2 data sources that are supported. One is the Quotes Plus data source, and that's the same data source that HGSI uses. And that is a high-speed data source because it already exists on your hard drive, and it's really, really quick for the program to access that and generate these snapshots. The other data source that's supported is Yahoo. So it will go out to the internet and it will download the symbols from the Yahoo website and get all of the end-of-day data that you've specified that you're interested in analyzing. And it will create, at the end of the day, the exact same snapshot using either of those data sources.
So if you only had 20 ETFs, it really wouldn't take long, even with Yahoo.
Yeah, that's true. I think on my computer with relatively fast broadband connection, to do the 20 ETFs for 10 years would take probably 30 seconds, maybe less than that.
Oh, well, that's not even an issue.
And then what you can also do is once you've prepared your snapshot of data, you can then further filter it using this snapshot filters area. So you could say, if it contains too much data and you're only interested in a particular time frame, then you could filter the date to only include those time periods you're interested in. And you can see here that we've got it set now to look at the March 2009 low, which was basically March 9, 2009 was the base low, and then we're going to analyze through to 12/31/2009, which was the end of that year. So that was a strong rally period in the market.
Yes, and I'm sure you'll be able to show the difference for being in the market only in more favorable times and being in the market when we're in a bear market.
Yeah,
so,
and
Anyway, that's for another. We can do that a little
Sounds
bit
good.
later.
What I will say is that these time periods is these are configurable too, so you can actually set up a time period that you're interested in and have it always available to you. And you can customize these any way you like. So if you've got a particular period you're interested in, you just pop it into this little grid here, and it stays in the program then forever, and you can just bring that back up whenever you like.
Oh, that's handy.
Yeah, it's quite a handy thing. And now what we'll do is you want to see the rotation. So all I do is I say there are two selectors in the design area. I've got entry design, and on the other side there's exit design. So this is where you specify what your entry signals should look like. And there are two selectors within these areas. One is a security selector, and this is for selecting stocks on an individual stock basis by analyzing individual stocks. And then there's the ranking selector, and that's the key to this whole thing, is being able to rank those stocks in order of strength. And the way I do that is, because I'm not really interested right now in doing any particular individual selection, I'm just going to select every stock that's in my snapshot. And then I'm going to rank them based on the Alpha 21 ranking. And to start with, because I want to see visually the rotation, I'm going to select all of the stocks.
So does alpha mean outperforming a base index, or how do you use alpha?
Right, yeah. The Alpha 21 is a combination ranking system. So it takes 4 different time periods. It's a 5-day, and you can correct me if I get this wrong, but it's a 5-day, a 10-day, 15-day, and a 21-day performance versus the S&P 500 index, or the SPY. So what will happen is it'll rank each one of those time periods, and then it will combine them all to produce the overall rank. So you should get the stocks that are strong with those different parameters will rise to the top of this list. And let me just
and the way I understand Alpha 21 is that's front loaded, so the nearest time period would have the most weighting to it. Is that correct?
That is correct too. In fact, because of the way the ranking is set up internally in the program, they're given an equal weight. But because the 5-period percentage change is also included in the 10, the 15, and the 21, it gives that 5-period an extra weighting. So the 5-period is heavily weighted towards the front end. And let me just run this. And
sure.
I ran it. And very quickly, you can see that over the time period we were talking about, from March 2009 through to December 31, 2009, we have all those rankings done for every single day, and they're ranked based on a top-based order. So essentially, the strongest ones are going to the top of this list.